and welcome back to Homeschooling Adventures. In today's grade 12 economics lesson, we are going to unpack one of the most important global financial institutions, the International Monetary Fund, also known as the IMF. By the end of this video, you will understand what the IMF is, where it gets its money from, and how it connects to the key topics like the balance of payment. Let's get into it. The IMF is an international organization that is made up of over 190 countries. It was created in 1944 after World War II to promote global economic stability. Its main purpose is simple, which is to ensure that countries don't experience a serious financial crisis that can affect the global economy. Think of the IMF as a financial safety net for countries. So where does the IMF get its money? Each member country contributes funds called quotas. These contributions depend on the size of the country's economy, which means bigger economies like the United States, they contribute more, and then smaller economies contribute less. These funds are then used to lend money to countries in financial trouble. The IMF has three key goals. The first one, which is to promote international trade, stabilize exchange rates, and provide financial assistance to struggling countries. In simple terms, the IMF tries to keep the global economy running smoothly. Now, this is where it gets important for your exams. The IMF is closely linked to the balance of payment. When countries import more than it exports, it runs a deficit. This means money is flowing out of the country. If the deficit becomes too large, the country may A. run out of foreign currency, B. struggle to pay its debts, and C. experience weakening exchange rates. This is where the IMF steps in. The IMF provides loans to help stabilize the economy, but there is a catch. IMF loans usually come with conditions, also known as structural adjustment policies. These may include reducing government spending, increasing taxes, controlling inflation. These policies are meant to fix the economy, but they can sometimes be controversial. Let's look at a real-world example. Countries like Greece, for example, received IMF support during the financial crisis. Greece had a high government debt, a large budget deficit, and a struggling economy. The IMF stepped in with loans, but required strict economic reforms. This is a perfect example of how economic theory works in real life. So to summarize, the IMF is a global financial institution. It is funded by member countries. It helps countries facing financial crisis. And it plays a key role in topics like the balance of payment and exchange rates. If you understand this, you are already ahead for your exams. If this helped you, don't forget to like, subscribe, and share with your classmates. Let me know in the comments what topic you want next, and I will break it down for you. See you in the next lesson. Good day.